let me get the recording started and we'll take it from here. So, first things first, what were we looking at? Totals, right? Total one. Last time last week we were looking at it, we were saying, look, if total one does give us a breakout, first target, 2.597 trillion, right? Above that, you've got this weekly seller zone right over here, along with your all-time high of 3.009 trillion. You've not taken the high. That is diabolical. That is, the market makers doing their thing. You have left this high up there, so that is a raid waiting to happen, right? For now, you flipped the bottom side of the weekly seller zone into support from this dump, right? So that gives me reason to believe you are now going to have a shot back to the upside. So you're looking for this now, right? On the daily, do we have anything? No? Oh yeah, we do. On the daily, here's your seller zone. It's very simple what you're looking for. On the hourly, do you go and use this as resistance, or do you go and flip this as support? If you use this as resistance, you've got local distributive structure, right? You've got initial resistance, raid, inducement of FOMO basically, and then a reconfirmation of resistance. This is typical. I love trading these structures, right? The smiley face and the inverted smiley face. I love trading these two. This is distributive in nature, right? Locally speaking, this will be distributive, which make you think maybe you get a deeper flush before going higher. But if you go up and start just doing this, then I think you just make new all-time highs this time around on total one, meaning Bitcoin is going to be pushing higher, right? So for now, this was a nice flush. You took out, a few on the lower time frame. You've taken out this wick, this wick, this wick, this wick, this wick, so on and so forth, right? So you have taken out some internal liquidity, and that's a successful retest. So now you're looking for that test at the upside. What happens here is key. Either you get that local distributive structure, which would on the lower time frame give you a slight move lower, or you get this flip into support, which will just carry us on our original trend to the upside anyway, right? So that's total one. You literally have one target right now on total one on the higher time frame, that is 3.009 trillion, right? So last week again, we've hit 2.597, right? We closed above it. So as soon as you close above this, the next target is 3.009. That is what we're currently attempting to get towards. Total 2. Now, how many times, I read this, how long, since this, I have been telling you guys, ETH is completely fine, it's completely fine, it's completely fine. Even last week, we were looking at this, last week's stream, and I was saying ETH is completely fine. If we take a look now, for all the ones that did fade ETH, what were we saying? Above this zone, right, we kept saying this, above 2,282 and 2030, ETH is going to be going towards HPR3 mid next, and if you get above that, this zone, right? Guess what? We're above HPR3. If you go to the 4 hours, you genuinely flipped it into support, and now we're getting our rally higher, right? So for me, I'm inclined to believe we get 3,500 ETH before we get this retest, but we'll see. Now over here for Confluence, we have 3,581 to this, right? We have this, let's say, supply triangle. You can see over time, this is where supply has been coming in. So very simple on ETH right now. This is not where you go and market long, right? Lower time frame entries are different. I'm not here to cover lower time frame entries, but here, what you can do is this, right? If you get here and start seeing SFPs, this is where you can take a head short on Ethereum, right? Because you can see the confluence you have in this area. So around 3,800, 3,780 to 3,800 sort of zone, that is where you look for swing failure patterns. If you get them, you can try and take a head short, right? If we're looking for a long, I'd either wait for this, or I'd wait for something like this to happen, right? Let the market come to you. Don't FOMO long in. If anyone FOMO longed in at any point during the last couple of days, especially yesterday, then obviously this would have been a disastrous candle for anyone that FOMO longed. But hopefully no one here did, go and FOMO long now after like a 2-month accumulation range breakout, right? This is not where you long. You have no framework, you have no risk management structure, right? No argument to be in a trade here, right? If you want to hold spot, sure, right? That's great. But then I'd argue you had an amazing reason to be building a spot bags over here anyway, right? So now this is a bit more FOMO. So, you might get a way better structure waiting, right? That's what I'm trying to say. So either wait for this or for this, because in either of these cases, your thesis for being in ETH is much greater than being in ETH in the middle of nowhere. You have no significant levels here, okay? So there is no reason to be in a short. The only reason you're seeing this currently right here, right now, is you have a weekly order block. If you can put it down, right over here, you hit the mid, and that's that. But again, you are trying to flip the bottom of the order block into support, so you could very well see, if this keeps holding like this, that move up to the actual target, right? Now the flush has happened. Do we get one more flush? God knows, right? But you could do something like this if you wanted to trade. if you raid these lows, you can cut basically, right? And one DCA at 3,247. Your target is going to be risk reward of 3 initially, so that high, and your ultimate target for this would be try and take this up towards the mid of the key inflection area. So you do have a trade setup that you could potentially take here. But the nicer trade setups, right, where your probability of getting stopped out is lower, is when you see something like this, because then you've taken out actual structure rather than just local structure. This is just for, like, you know, especially if you're getting a lower time frame entry. Let's say you get one more tap into this, or better yet, if you get 3247 on the 3 minutes and you start to see 15-minute candle body closes above, so on and so forth, you can try and take a scalp to this, to the upside, right? But that's ETH right there. Nothing to do here on the higher time frame, especially if you've already got bags, which you should have if you've been, you know, listening to any of my streams. If you've already got bags, all we need to do is wait for this, because ETH nowhere near, it's not even tested its all-time highs yet, right? This will go higher over time now. That was a 46% candle over the last 9 days. Absolutely crazy. Completely outperforming all majors, and all of a sudden 1 week and ETH is outperforming the S&P. You know, all of these majors is outperforming all of them year to date. It's absolutely ridiculous. This is why I love crypto, man. But going back to the master list, we'll take a look at total 2, right? With that being said, again, we weren't surprised this happened. We were saying total 2 looks good, right? After total 1, total 2 was actually looking really, really good. Your 6-month buyer seller zone over here, right? Area in history where both buyers and sellers were active. It got filled. You held that level. You started. You have the smiley face structure, right? So we had the distributive. We were just talking about the upside down smiley face, the frowny. We have the smiley here, right? Look, initial support, raid on liquidity, reconfirmation and support on total 2, right? This is a cumulative structure, right? And then after that, you know, you just had a massive breakout off of this 6-month macro read buy zone mid. Right, you've hit your 3-month seller zone over here. If you go to the 3 months, you can see this candle. This is where sellers were in control, right? Not that candle, but rather this right here. Hang on, let me go back to the 3 months so you can see it. Let me zoom in. You have a candle where buyers are in control, but then you have an area where sellers took control back from the buyers, right? That's your 3-month seller zone. That is where you're rejecting off of right now. You're saying, okay, well, sellers were in control here before. They're still in control for now, but what you're doing is you are flipping, for now, the 6-month 0.5 off the seller zone mid into support. So if this daily closes like this, you could very well, once again, go up to attack this and start doing that. Right, but if you lose 1.145 trillion, I'd look for move downs on the higher time frame back towards 1.109 trillion. Right, something. So if you get something like this, then I'd look for something like this. But if you get closes above, literally, perhaps you get something like this. 2 scenarios on total 2. But the move has happened now, right? Again, this, looking at total 2, you know this is not where you start to market long ETH. You have no risk management profile here, right? Right here. You've hit the resistance for total 2. Total 3. Another one we looked at, we said total 2 was looking better than total 3 and others, which was correct, right? We were still below resistance here, but you know, that big injection of liquidity, Trump winning, that was enough for total 3 to just absolutely break out of this huge zone we were at, right? So this red box, we were saying we need to get above this. Well, you did get above, you got way above, right? This red box, you just completely shot up. So total 3 now, this is why you're also been catching bids as well. Your target is up here, right? This red box, and your macro targets are these 3. 873.619 billion is the level I want tested. Right? Maybe we get something like this. But you have local resistance here, and your macro resistance, next macro resistance is 873.619 billion. Right? Still have a room to the upside for this, but again, now you're out of the area where you can manage your risk. You have no risk management. If you were to enter here, you're saying, you know, I'm going to put my stop loss somewhere below this swing low. That's the only logical, like, you know, if you're talking proper framework, proper market structure, that's the stop loss you're going with, right? Somewhere down here. That is not logical. You don't have a risk management profile anymore. You're going to have to go to the lower time frame. But the lower time frame is akin to super chop now, right? We know that. So life's just harder if you haven't accumulated any positions. We have others. Others look so good, right? Resistance, flip to support, back to resistance, back to support, back to resistance, trying to reclaim our support. If others closes like this, right? We have 5 days still, but if the weekly closes like this, others has a lot of room to go higher, meaning your alts have a lot of room to still go up. Okay, don't think you missed a run or anything like this. Look, bear in mind, if this is the start of parabolic season, I'm expecting the next 6 to 9 months to be bullish. You missed 1 week of that. Put that into perspective, okay? Don't think, oh, this cycle's done for, something like this. It's not. right? You're just getting started. Bitcoin can still go higher. Many of these alts can go way higher, right? So just look for alts that are areas where you can manage your risk, that you can still ladder into. Those are the ones you want to build your position on, right? Don't think you've missed a run or anything because you missed this. And you see, all these wins on Twitter. That's great because but most of the people posting those, they've been around since the lows, right? If you haven't been around since the lows, then it's what it is, right? That's the trade-off. People who took the risk earlier are going to get rewarded earlier. It's what it is. So total others looks absolutely great, literally above your key resistance. Your last lower high that led to the lower low has been taken out, right? Now if you got a higher low, that would be ideal, but you just might not, right? If this flip, for example, this daily retest is successful, you might just start doing this and going up, right? That literally might just be your pullback right there. That might just be the high low, right, that you're getting. But yeah, total others looks great. So alts still in the rotation, right? Gonna catch bids. Total DeFi, we said this looks good. Breakout back to the supply zone. That's where you're currently rejecting. Ideal price action would be, let's put a higher low in. You've taken out the last lower high that led to the lower low, right? So this is your shift in market structure. We're just waiting for the high low to come in to get confirmation of trend shift. But the high low could come in now. It could come in way later, right? Who knows? But we are looking for the high low to come in, and this grey box, if we got it, would be ideal. This is your weekly seller zone. You've hit resistance, get a pullback, get a high low in, and then go up. This would be ideal price action, but do we get ideal or not? We'll have to see, right? Maybe we get up only, and this is just one little pit stop before we just start blasting through. Others dominance, if you take a look at it from this perspective, right, you have a key demand triangle, you're holding it still, right? There is nothing to worry about on others dominance either. Did I not put the triangle here? Hang on, let me put the triangle down, one sec. So you're going to be looking at this chart to tell yourself, are you going to be in alts or not? If others dominance starts to lose literally all structure, then it doesn't make sense for you to be in alts, right? But if others dominance is looking like this, what's it looking like, you might wonder. Well, let me explain to you what it's looking like. One second, just line this up. There we go. With all others dominance looking the way it is, there. Historically speaking, you can see you're at the bottom of your trend, meaning this is where demand should come in, right? This is where you want to take your risks. Now, if you were to look at this like a normal chart, like a USDT pair, what would you do? You would say, okay, well, the ideal solution for a long here, currently speaking, would be this, right? Your last structure low, put your stop somewhere below there. You're targeting the external of the harmonic. Right? This would be, currently speaking, this would be the kind of scenario you go with, meaning this is an area where you would long this asset, right? This asset is showing you the dominance of the cryptos that are not in the top 10, right? This is showing you others dominance. So that's telling you then, if you could go along on this, you should be looking at alts that are at the lows, right? Because if this bounces and others dominance starts coming up, that is symbolizing that liquidity is rotating into those coins not in the top 10, right? Your altcoins, your bonds, it's going to be rotating into that. Now pair that with the fact that where are we currently, right? Over here you see we have a completed M shape, we have a Gartley, you have your type 2, and the type 2, as long as the type 2 is successful, which it looks to be for now, you have very key areas, this is going to go higher. Your target is C and then A, literally, right? So this could go as high as 19%, if not higher at some point, right? The higher this goes, the more your alts are going to be catching bids, the more and more alts are going to be popping off the lows. Especially this is for specifically for alts not in the top 10, right? This is others dominance. So as long as you are holding this structure and you aren't doing something like this, right? You should be in alts is what this is telling you. You should be not like, full port alts, but you should be prioritizing building your spot bags, building your swings out on alts. Look, because from here you're looking for this. Don't get chopped up on the 3 minutes trying to trade some shitcoin that's illiquid when you could just buy and hold with conviction, telling yourself like on the macro, this is what's going to happen. Right? At some point, others dominance is going to go up. And this happened when BTC hadn't even gone parabolic yet, right? This isn't proper alt season, I'm telling you. I've been telling you guys, look, you've not seen proper euphoria because we haven't gone into price discovery yet, right? We were saying this up to last week. from my last week's stream, we have now gone into price discovery. Bitcoin's going to keep going higher, and once Bitcoin dominance tops out and Bitcoin starts consolidating, right? Bitcoin dominance comes down, Bitcoin stabilizes. That is when you see what proper paranoia is. Not paranoia, euphoria is, right? Your odds, you're not gonna want to go to sleep, because going to sleep is gonna cost you money, right? You're gonna rotate, because if you miss that rotation, within a few hours, that's 60% you've just missed out on. And that's the kind of thing I'm talking about when I say odds are gonna go crazy, right? You haven't really been in that environment yet, because we haven't gone parabolic yet. If this is your first bull cycle, you haven't experienced it yet. If you think you experienced anything back in 2023, and if you remember all the calls that I gave back in September to October of last year, right, those went parabolic. This is gonna, the bags we've been building over the last few months, right, they're gonna go way higher than anything we've experienced last year, right? So very, very simple. If you want to know an indication, do I stay in alts or do I get out of alts? If you start to lose this structure, you can cut your alts, because you're saying, okay, if I ever reclaim this, I'll get into alts. But for now, dominance for others looks shit. That means liquidity is going to be rotating out of others, right? Coin's not in the top 10. But as long as this is holding, right here, you're above, distinctly above this key area. You're targeting to the upside on the macro. That's all it is. You're literally targeting to the upside. Let me check something real quick. You have currently lower low in price, higher low in RSI. So, hey, you have weekly bullish divergence building over here as well, right? Lower low in price, higher low in RSI. That's class A weekly bullish divergence. Nothing to be faded, in my opinion, right? So, yeah, others dominance looks good. Okay, that's what I'm trying to say. So, your altcoins, you're scared to bid. Just look at this chart. Look yourself in the mirror and just buy, right? Do it for yourself. Do it for, I don't know, whatever the reason you're trading for is, right? This is where you take the risk. If you don't take the risk here, where are you going to take it? So that's other. So we looked at all the totals. Let's look at the Dixie. So the one thing I don't like is the fact that Dixie is super bullish, right? Dixie is literally ramming up to range highs, which is really, really weird, because like I said, we'll see what happens with FOMC, right? I have a feeling they're either going to say something that's going to start nuking the Dixie, or they're going to say something that's going to nuke risk on assets, which I'm hoping is not the case. And that's the only, prayer bears have right now. Because if you're a bear, what you're literally telling yourself is, you're praying to God that Bitcoin closes November monthly red. That's what you're praying for. Because November is the time, is the month that sets the trend, right? If you go and look at Bitcoin's historical returns, especially if you look at that on the monthly, it doesn't really matter what your October did, right? October could be green, October could be red. What you're interested in is, what did November do? A green November will lead to a green December. A red November will lead to a red December. That's been the trend for the last 8 years, I believe, right? What November does, December follows. So if November is green, we close green, then December is going to be green as well. We're going to carry that trend up. But if this looks unlikely right now, super unlikely. But imagine in a scenario where we do close November on the red, that is going to be nasty, right? That would be akin to a shortened cycle scenario where you get a blow off top, you consolidate for a bit longer before getting a proper move up, right? I don't think this is going to happen right now, but hey, it's crypto, right? Never put something at 0% chance. That is literally the one prayer bears have going for them. They're praying that November closes red, which I just don't see happening now, right? But we'll see what happens with FOMC and stuff. But that's the totals. That's Dixie. If you now take a look again, Dixie at key resistance, right? So if you were to go risk on, again, you have a reason to go risk on here. So either they keep pumping this into higher time frame levels, and then they say something that crashes the Dixie and markets just absolutely explode, or they say something that actually pumps the Dixie even higher, in which case we'd get, I think, a harsher pullback on the risk on assets. But if they do say something that pumps the Dixie, I'd be looking around 109 ultimately. You have a nice intersection there. By the end of December, start of January next year sort of area, around that time frame, I'd be looking at around 109 Dixie. But we'll see what happens, right? Another one to look at, USDT dominance. Again, this is another reason you should not be massively just trying to market long Bitcoin or anything like this right now. Bitcoin is still the majority. If you look at Bitcoin dominance, 60% of 60 to 62%, 60% of the crypto market cap is in Bitcoin, meaning most of this is basically correlated to the Bitcoin chart, right? You are currently, again, at that key support I've been telling you about, right? I told you guys last year, or the start. Sorry, not last year. I told you last quarter, right? Last first half of 2024. As long as you're here and you do not lose, don't open market longs, right? This is where Bitcoin started its pullback, right? And many alts did as well. Just because if you look at where we are, every time you've come to this area, you've had massive bounces, right? So, for if you have targets like 120k and you have targets like 150k or so on and so forth, to even begin hitting those targets, we do need to see this on USDT dominance, right? You're currently at a weekly demand zone. Impulse, consolidate, impulse back up. That is a weekly demand zone. You're also at that, trend from all the way from 2017, right? The high, not broken it yet, right? So maybe you do something like this. Who knows? Maybe you get a slight correction again in the markets, right? But you're not gonna go aping into anything now, especially into Bitcoin, right? You can slowly build your position on alts, right? Where risk reward is good because we've seen what others' dominance looks like. But if this happens, then Bitcoin could see a very, very harsh correction, right? It could be like a lower time frame correction. Even something like this would give us a slight pullback on Bitcoin, right? So what you want to see for us now to have absolutely zero things holding us back is just this, right? Breakdown, get a confirmation. So perhaps get a breakdown and then start flipping the mid, the top of this into resistance, close this below. Then that would set us up, I think, for a nice liquidity cascade down on USDT dominance, meaning markets just absolutely rising up. Right, so very, very interesting times for sure. Let me check the chat real quick. Blowfin, I think Blowfin's good. Bybit was really, really good. Mexi's I still really like Mexi. Yes, in talking about CME gaps, yeah, BTC and ETH both have the CME gaps right here. These have like a 90% hit rate, right? The question is when. We had this CME gap that completely filled on ETH, and then we gapped up higher, right? So now a pullback would be amazing. Doesn't mean we need to get it, but something like this would be really, really nice on ETH to load up on. So I mean, it's confidence for a pullback, right? It's confidence for a pullback. Plus that CME gap fill would front run anyone trying to enter on the retest of between basically 69 and 74, right? So maybe we do get it filled sometime soon, or maybe we leave it for 2 years down the line. Who knows, right? All we can do is have it marked out. If it gets there and you see the appropriate reaction, i.e. buys taking control, you bid. If not, just let it go through. And then if you set a lower high here, then you take a short. But that is all the macro. That's the macro perspective on these tokens. Let me quickly go through. Look at this awesome ETH. Yeah, I've deleveraged quite a bit. And by that I don't mean I've sold on my leverage position, but I've trimmed some profits nicely, right? Had a lot of positions open. If you guys watched that harmonic setups video I released in September, literally everything from that has popped so hard. Right, so I've taken a nice bit of leverage profits. I will size up again if we do get macro pullbacks and high lows and stuff. But until then, just take profits as we go up, rotate it to spot. I have money for memes. I have money for vacation. Gotta be on vacation next week. For my in real life businesses. For just if you need the money, just use it. That's what leverage is for, right? And then you just hold on to your swings and your spot. But that's been ETH BTC. That's another one I want to look at, right? Ethereum against BTC. So still chopping around this area. You have hit the 786 zone, right? So this is that zone we were talking about. Ideally, this is where I want to see a bottom form. I don't want to see us go lower again. If we do, it's whatever. I will just buy ETH against BTC contracts, right? The lower we go, the heavier this will be, because eventually I'm expecting this, right? So I'll just be loading up on ETH against BTC contracts at key areas if I see buyers stepping in. But for now, if this does lose momentum, ETH against BTC, then we could see pullback on alts again. Basically, BTC is just going to be the one that's taking the lead for now. Right? Ethereum's definitely not going to be the one again. Another thing to look at, well, what was I going to say? I completely forgot. My brain's gone dead. I was just about to look at something. What was it? If it comes back to my head, I'll look at it. I forgot what I was just about to look at. Jesus. Ethereum dominance, lower high for now. Bitcoin dominance, grinding up still. You flipped the 0.5 of this huge area here into support, right? So now if you if you get above this, then 62%, 62.11 to 62.51 is where I'm looking at next. Right, that's where your next targets are. Maybe go there and then have a sharper correction. You could do something like this, right? This, and that's the kind of structure you'd be looking for. Distributive locally, that's where you'd be stacking up on your odds, right? Look at your BTC pairings. What looks ready to run against BTC? Off my head, say AVAX, all of these ones, all the coins in price discovery, if they're making higher lows, those are the ones you want to be getting into, right? So that is Bitcoin dominance. So BVOL, actually we don't really need to look at BVOL right now. But that is Bitcoin 1, ETH 1. So yeah, we've looked at all the majors, right? So now let's actually go and look at the charts themselves. So Bitcoin, very, very beautiful. What did we do? Firstly, in terms of key inflection areas and historical price ranges, we broke out of our all-time highs, right? We are now making a new historical range as we speak. Is this the top? Who knows, right? This is under development still. For targets, I have this. These I drew on literally years. I think it's been more than a year now. Finally got them hit, right? The second box, and the more local ones I drew yesterday actually are these great boxes. So this was my first target zone between 84 to 91. After this, you have a mini one between 94 to 95. But if you get above that, the proper one is between 101 to 107. If you get above that, 111 to 114. Keep going above that, 115 to 119, so on and so forth, right? When you go to price discovery, the best you can do, mark out all the areas where you see confluence, and then wait for price action to develop before you call any tops. So this cycle, I do think we don't go like 200k. Many people are saying we do go 200k. Personally, for now, I'm saying I don't think we do. But if we do, I'm not discrediting it, right? If we do, I welcome it. It's just more money for us. But I think what we are going to see is somewhere around 120k to 140k, right? I want to say somewhere around there is probably where we see our top, and then we start to chop, like, you know, run up, and then bear market comes around, you go back down. Ultimate retest you'll be looking for is a retest of this zone again, right? Between 64 to 73. Should we not retest it on the way up at that moment in time? If not, and you lose this zone, then you're talking about the lower levels, right? Then you're talking about, you know, maybe you get 1 second, maybe you get 58k. You lose that, you'll be talking between this one again, right? So between 53 and 44 again. Lose that all the way down here, right? But we talk about those when it happens for now, but the key levels are already set, right? Mark them out for when we get back into this range. These are going to be the zones you're going to be watching for. But target wise, why did I set these as targets? These are based on fibs, right? And for those of you that are familiar with what these are, we do also have a lot of we had a lot of targets to the upside, right? In terms of both diagonals and horizontals. We're just going through absolutely filling everything, right? So rejected off these intersections. We do have higher targets, right? It's possible in price, it's possible in time, so 99k. And if you've got intersections higher than that, I'll be drawing them on appropriately. But you have, according to time and price, you have a lot of reason why you could chop here, or you have a lot of reason why we could go up, right? What you don't have is a lot of reason why I could get a nasty wick down for now, right? But should we break market structure on the daily, that's when I'll be looking for lower highs, anything like this, anything suggesting distribution, and I'd look for a hedge appropriately, right? But target wise, we're literally in price discovery now. There's nothing to do apart from hold your bags. If you're scalping, that's a different story, right? And scalping's really, really fun right now. It's really easy, long the dips, and just take profits on the way up aggressively, right? Averaging about literally 8k a day scalping for the last week, just because of all the volatility we've had. But with that being said, you're not going to be doing this, like, you're still going to have some semblance of targets. You're going to be using fibs, whether that's diagonal, whether that's horizontal, you're going to be using fibs, right? So fibs are going to be your best friend at this current moment in time. But this is what we've been waiting for at the end of the day. Like, you guys should be excited. This 8-month consolidation range, we're broken out of it. I'm sure many of you do have bags, do have positions. We've been building from down here, right? We've been, all the crypto stocks are called, right? If you go and take a look at, for example, who remembers this, right? I called this a few months ago. Wolf. We are currently up 194% from our entry. I did say give it time, right? Give it time. These will catch bids. There's so many others. Riot, Mara, Clear Spark. I gave a load, right? Many of them are up huge. I just haven't updated them, but many of these stocks are up absolutely massive. This is institutional FOMO. But if we go back to master list, no, focus. But yeah, BTC, this looks great, right? Like at the end of the day, you've got nothing here going for you. If you're looking to short this based on, like, there's really no reason right now. The only thing you have is like lower time frame structure, right? That's all you do have. For example, on the daily for now, what you have is you have a seller zone, right? You don't have any other confluence apart from this for now. If you're looking for a short, you're looking for distribution, you want to be seeing something like this, another lower high. You have upside down smiley face again, right? Distributive structure. Then you look for lower time frame flushes lower. If not, you just do something like this and carry on going up some more, right? I don't think the rally's done. But that's been Bitcoin. So if you look at Ethereum, we already looked at this, but Ethereum got that pullback to 0.5. Let's take a look over here for now. Weekly order block, that is where you're currently at. Again, your high conviction bids are going to be down here. I don't know if you get 2,800 ETH again, but if you do, it's lucky, right? You're looking for something structure like this to develop, right? You know, you see some sort of radon liquidity. Reconfirm what was once support as support again. A cumulative structure, right? Something like this. This is where you bid. Heavy. You wait for the retest to happen, you wait for your confirmation closes, and then you bid, right? This is where the structure for the market would look the most bullish, let's say. Because again, you've got a smiley face. It's a cumulative structure, right? But ETH, very, very simple. We went over this already. Let's look at Solana next. So we were saying on Solana, again, in terms of historical price ranges and key inflection areas, we were saying, as long as these range low holds, historical price range mid is your next target. If that holds and you close above that, then your next target is the key inflection area higher, right? So we have now come to the higher key inflection area, and currently we're rejecting off the mid of the said zone, right? We can see that on the 1 hour, for example, you're losing it. So if we do something like this again, right? So what do we have here? We have a buyer seller zone on the daily, just like this, right? We have a buyer seller zone on the daily. If you want to try and take a short on Sol, which I wouldn't recommend right now, but if you get something like this, breakdown, and then a lower high, that is where you would look for, you know, high risk to reward head short on Sol, right? Don't do anything right now because nothing's happened yet, right? You're still consolidating. Price action is still being developed as we speak. But Solana, if you do flip this now, if you hold this as support and you flip this, you can look for your low time frame entries on a long to push this, because above 218.95, you have one measly resistance at 238. I think this gets blown through. You're gonna raid all-time highs is basically what we're saying. 260.05, you're probably gonna go and make new all-time highs on Solana. Injective, let's just go through our main positions. You are currently flipping old all-time high, right? If you go to something, why did I just draw it like this? Monthly, here's your monthly seller zone from history. You are flipping the mid of that into support as we speak. This is following a huge accumulation structure here. If you're not in Inge and this is a successful retest, I would seriously advise starting to ladder in. I've been telling you guys for long, my top 10 bags are Bitcoin and ETH, and then Solana, Injective, Aptos, Vanry, AVAX, Say, Sui, Ondo. For memes, it's Mumu, Doge, and then Brett on base, right? My top 3. Everything else is just going to be for swings, right? That's it, you know. ARB, GMX, all of these, they're going to be for my swing long, right? I'm not going to hold them with conviction or anything. I'm entering them because they're a good risk to reward places. Once they give me some profits, I'll trim some, rotate more into spot, right? So on and so forth, right? But your main bags, you want to be very focused with those. You don't want to be the person that is opening 100 different positions spread out, right? My main allocation is to my main bags, and after that, you know, I might open 50 other swing longs. That's strictly for my trading account because all those coins were areas where I could manage risk, right? You're not going to be doing that with your main positions. But Injective, look, this flip is successful. You're flipping 6-month macro seller zone low, right? You're flipping the mid of what used to be a monthly seller zone as well. That is high confluence for me, right? You'd be looking for something like this, and then Inge to absolutely blow through $30, which we haven't hit yet. And then, you know, if you go to the weekly, you can see what the targets are, right? Your main target is going to be 32.95. After that, you're going to have 35, 40, 44. And after that, you're going to have 52, right? And if you enter here, you don't have to worry about, oh, do I take profits or not? You just watch as your candles print green, 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 and green, right? On a higher time frame. And I think Inge does go triple digits in the peak of the bull run. This looks very, very good, right? I've been saying this for the longest time now. So if you're still not in any Inge, please, if you get the chance, right, you get market literally telling you we're flipping what used to be previous all-time highs, monthly seller zone into support as we speak. that is something you can start laddering in on, right? Once this candle closes, you could open, let's say 30-40% CMP. Save an allocation for if you're still uncomfortable, right? Maybe you get a slightly deeper flush. If you do something like this, and you, on the reclaim, add one DCA bag and save a DCA bag for when you take out the last lower high that led to a lower low, right? So when you do this and you get a confirmed shift in trend on the daily, right? That is when you would add the last size, right? So this high to be taken out, and that'd be your last size up, and then you'd be fully allocated on the right side of the trade to go higher. It's not too late on many of these alts, Injective being one of them, right? This is not in the top 10. This is amongst, this falls within the others category, and we saw how good others dominance is looking, right? So that's Injective. We have Aptos. Now Aptos, so beautiful. I made a bag of this. I deleveraged heavy on Aptos yesterday. We were talking about this 5-0 literally last stream, right? We said, look, we have a shark, go down to the 5-0. This is a good place to bid if the 5-0 is successful, right? And last Tuesday, 5th of November, is literally when we were doing this stream. So the entry trigger for this particular trade hit after this Tuesday closed, right? So on that Tuesday stream, we said if the 5-0 candle closes successfully and you don't go lower, then you can literally take a risk based off the candle body close, right? Which was here, open along. If you lose the 5-0, you just cut, right? But from that entry model we described last stream, we are up 75%, right? This was a monstrous trade. Higher highs and higher lows still as well, right? So for now, again, this looks beautiful because what you're doing now is we had this area here. If you go on the 3-day, it's an area where both buyers and sellers have been active in history, right? So buyer seller zone, you've wicked into this. This is a liquidity pocket up here on the daily. You can see what you have. This is a textbook supply zone. Down, consolidation back down, and even within that textbook supply zone, what you have is a order block. Here's your bearish order block, right there. So you've hit this zone, you've taken all the liquidity from it. These are all now invalidated, right? These are mitigated. You're looking for a flip of this into support in the future to look for entries of them. But for now, what you're doing is you're saying, oh, all the liquidity has been taken. If this daily again closes above here, right, closes above this box, then that is an area where you're going to be taking a trade. That is where you're going to be taking a risk. You have a 4-hour buyer zone here. If you get a pullback towards 1189 and it's a successful retest on the 15, I would honestly, lower time frame entry model, I would start laddering in, because your risk to reward is going to be very simple here, right? If you lose this gray box, you can just cut. Maybe you get the lower time frame smiley face, initial support, radar liquidity, reconfirmation of supports, and then up. You could get something like this, right? Or you could go lower. But if you get successful retests here, that's where you take the risk, right? You wait for the retest candles, and once the retest candle is closed and the confirmation opens above, you enter a trade, put your stop loss below the retest wick low, and then take the trade like that, right? But yeah, your areas where you can manage your risk should you get a pullback, right? So Aptos looks beautiful. I mean, what can we say? Just look how amazing this has been, right? So again, Aptos, and I gave bids for Aptos back in January of this year, by the way. You can scroll back on my channel, right? We already had this area marked down as if you get here, just bid. So those January bids, I'm still holding. Those are spot / long-term swings. Those I'm not trimming here, right? The one I'm trimming is for my more my trading account right now. Vanry. Look, we got the radar on liquidity. I said I got stopped out break even last week. As soon as we got the flip, I re-entered. Same key areas, nothing's changed. Still have time on this one. As soon as you get closes like this and you re-close above what was your initial entry average prices, which is all the way down over here, right? You get a close above. You can once again enter spot. Your stop loss is going to be below this wick low, right? Very simple. So Vanry gave us a re-entry. We flipped the 4-month buy zone. 4-month buy zone here, and now we are retesting the 6-month 2024 6 months. So this is January to June macro read buy zone mid, right? So basically areas where buyers were in control in the past, in the first half of this year, the mid of that area is where we're currently flipping as support, right? So again, look, resistance in past. Now we're trying to flip it to support. If this retest is successful, you can wait for daily candles if you want, or you can enter some right now based on the fact that 4 hours successful, right? Ladder in, and then if you lose that structure on the 4 hours, you can just cut. You've not entered with full position size, you're entering with spot, so you're losing nothing, right? That is nothing. Look, let's say you're going with a 10k position size for Vanry. If you were to open, let's say 25-30% CMP, $3,000, you're risking 3%. You're saying if you get below this, you can just cut that and just re-add when you reclaim, right? That is nothing. But if this is successful and then you get a daily close above as well, then you can add more position size, because now you have time frame you got a successful retest on the 4 hours, then you got a successful retest on the daily, which gives you a higher likelihood of going above, right? So Vanry, another one that is in my top 10, right? Just because of where we are, just take a look at where we are, right, bro? Send this thing to $1. On God, send this thing to $1 this bull cycle. I'd be so gassed if it did. That's retirement right there. But Vanry, amazing place again, right? Look, resistance in the past. Flip this to support. You're also flipping your what used to be areas where you rejected, right? You can see you're now flipping the top side of that into support. So your supply triangle is turning currently into a demand triangle. So from here, look, your main target up towards 13 cents, even as a trade, if you were to take this on leverage, right, that is a 42% pump on Vanry loading up, right? So in terms of key areas as well, if you take a look, a 786, right, you bounced off the 87886, i.e. deep value levels of this low to this high, right, based on this current trend from this low to this high. And now you're currently trying to flip the 786 of that said level into support as well. Extra confluence for the chart we just looked at. Why is this key area important, right? So two things to keep in mind. Let me quickly check back to the chat before I carry on. I'll take a look at XRP in a minute, Hega. Pith, yeah, I'll take a look at that, Magic Key. Yeah, I've resorted to doing it mainly on YouTube videos, bro, because right now I've got 2 different business ventures in the pipeline. So honestly, when I say I've got no time, I'm not joking. Last week, I literally fainted from a lack of sleep. I went and got myself checked afterwards because I was scared it was something else, but it was literally just exhaustion. I'm getting on no sleep right now. If anyone's in the UK, by the way, quick plug. If you're in Birmingham, 23rd of November, I'm doing a huge pop-up for my a business I've got with a friend. It's a clothing line. We're doing a huge pop-up. You know, we've had promos from, if everyone listens to Afro Beats, bro, we've had promos from Davido, we've had promos from Victoni, potentially Burna Boy soon. So, you know, turn up, bro. Free cocktails all around the house. Birmingham, 23rd of November, if anyone's from the UK here. Yes, sir. Anyway, let's see. Okay, so I'll just go through the top 10 again, guys, and I'll look at some chart requests you guys have, right? Let's take a look. So that was Vanry, very, very clear, right? This is the zone you're looking for. 0.0930 is the line in the sand right now. If that's lost, I'll be looking at 860, this one right here, right? But next one, AVAX. Been saying, bro, AVAX is probably the bag I showed the most. It's not done anything yet, right? This is a pump for ants, but that's what I believe. That's what Solstice was saying on Twitter. This is a pump for ants so far. I gotta agree. Especially in regards to alts. AVAX, again, for those of you that haven't been in my streams before, why I love this so much from a technical perspective, you have the M shape, your 886, right? You have a macro bat that was 2 years in the making. 21st of September 2020, finished 2022. So basically 2 years in the making, right? June. Then you have a massive accumulation area, right? That also doubles up as a falling wedge. And then you have your big blast off, right? This was our initial run last year. You hit the terminal 1 of your initial wave structure target, right? So this is the terminal 1 zone of the harmonic framework. Before you do that, you do reclaim the 86 as support, revalidating this harmonic, hit terminal 1, and then you come down. This is typical price action, right? This isn't anything bearish on the macro, because this is your type 1 reaction. This is your type 2 return, and look what the type 2 return did, right? You could not, this is poetry in motion. You come back once again to the 886, right? Your original wave structure at this point from 4 years ago, right? 4 years in the making now. And you revalidate that 886 as support once again, reconfirming this bat 886 to be valid, right? Your PRZ. You had a demand zone lining up in the area as well. You feel the liquidity, reconfirm the 86 support, and now you're going back up off of this. You had, again, in the pipeline, you had a weekly buy zone here, initial support, radon liquidity, reconfirmation and support. That is a cumulative structure, right? That is the smiley face. I love this. And now you're breaking out. The last lower high that led to the lower low has been taken out. You're literally waiting for a high low to come in. And for all you know, this could be the high low, right? So again, AVAX, look, if you close like this, right, above 33, you can take a risk here. you can start laddering in, right? For spot now, start laddering in, and at some point you also got to think of this as widening your stops, right? At some point you got to widen your stops. If you keep your stops way too tight now, you're gonna get stopped out before things go up. You know the trend is shifted. We're just waiting for a high low. Once the high low comes in, that is where you want to be fully allocated by. Don't be fully allocated before the high low comes in. But AVAX now, like we've taken T1 out, I'm looking for first target 75.50, and after that triple digit AVAX, right? And maybe it takes us, 220.30 to actually go and fill this. Who cares when, even if from now on a high cap like AVAX, from now up to here, it's still a 200% pump, right? So in terms of just TA perspective, let alone fundamentals, right? Forget the fundamentals for now. Just in terms of a TA perspective, this looks absolutely beautiful, right? Which is why I've been shilling AVAX so heavily. And if you remember, I think it's about a month or 2 months ago, I remember telling you guys, I was saying, look, at some point AVAX is gonna pump from these lows, and people are gonna ask me when is a good time to buy AVAX once you're at $60. That time is coming, right? We've started. That time is gonna come. And to top it off, we also had this very, very nice ABCD to top everything off, right? It's not a perfect ABCD, as in, this is a 539, therefore this is a bit shorter. But reciprocal ratio wise, if you have a 0.5, what you're saying is you're typically going to get a 2.0 extension, right? That is very, very close to a 2.0. So for me on the macro, that is an ABCD that is valid. Right, so AVAX looks absolutely beautiful. So again, if you're presented with opportunity, like you're potentially being presented right now, right? If the daily close is successful, layer in some. If the 3-day is successful, layer in some more. If the weekly is successful, layer in some more, right? You just want exposure. You're not trying to time the bottom. You missed the bottom anyway. You're not trying to time the next bottom or anything like this. You just want exposure. Fuck your average price. Forget about that. Just have exposure in a way where you're not going to be stopped out. You're not going to lose your liquidity on one flash crash, right? Have liquidity on the side to buy more should we dip. And just profit by having exposure. All you need to do now is have exposure. No one cares what your entry is at this point. Okay, just have exposure and ride the market up. Make money for yourself. That's all you're trying to do at this stage. Okay. So that's AVAX. Okay, say next one. Another one I'm shilling heavily. I'm into this, really, really into this. I'm liking what it's doing. The structure wise, again, if we take a look, right, let's go back to the 3-day. I'm pretty sure this did have a smiley face. There we go. 1 second. Did we have it on the weekly? No, 3-day was the cleaner one. Right over here, what do we have? We have a 3-day buyer zone, an area on the chart where buyers were active on the 3 days. You have your raid on liquidity, right? And then you have your reconfirmation of that same support as support once again. Letting you know that anyone that market shorted here, FOMO. Anyone that sold here, trapped, right? Sorry, anyone that market shorted here, trapped. Induced fear, right? Anyone that sold here, missed out, right? There were exit liquidity, or rather entry liquidity for market makers, and this was confirmation we're gonna go higher, right over here, and now that's exactly what we're doing, right? So your last lower high that led to the lower low again has been taken out. You put a high low in, say is now officially back into an uptrend, right? It's not in a downtrend anymore; it's in an uptrend. Even on the weekly, the last lower high that led to the lower low has been taken out, right? You've shifted market structure. So this coin is no longer in a downtrend, it's in an uptrend, right? So if you get any sort of pullbacks, especially towards this gray box, and it's successful, that you bid. You could enter some right now, DCA some into here, right? And you for macro closure, let's say you start closing candles below this level, then you can just start layering out slowly and just re-adding when you get back above. Right? But again, I'm already positioned from here. Right? We've been talking about, especially my top 10 bags. Every week we did entries. I've been saying, look, this is a good entry, this is a good entry, and I'm still gonna add some more should we get the opportunity to, because you can't never have a big enough position size. But say another one that looks amazing, right? You either you can get it. Don't full port. You're currently still under resistance, locally speaking, right? What you want to see is this zone being flipped. So what you could do is you could do something like this, right? You start layering in slowly, have an allocation for those deeper levels we were talking about, like around here. And if you flip this, that is going to be where you add your last allocation, be fully positioned for the wave up, right? Say is another one. Delete this, delete this, delete this. But yeah, say looks great. Basically, like many of these alts look very, very beautiful, right? Sui, literally a price discovery, right? Crazy. From that entry we were talking about back in September from the harmonic setup video, 346% up. And Sui's little brother, Cetus, which is the layer 2 on Sui and Aptos, we're not surprised. This thing ran for a monstrous 573% from when we talked about it. Right? If you guys remember, I said, look, you get above this blue zone, you enter. You got above, and then you never looked back. It was up only. Right? 573%. So now, look, big pullback, sure. This, if you get successful flip of 0.5, right, you get here and see reaction. This is where I start layering in. If you're not in on Cetus, how would I cut? I would cut if you lost this red box, right? So layering appropriately, right? That's a pretty big chunk of area to get in. Or if you want to do spot based on lower time frame, once you get your retest wick low, enter when the confirmation is successful, and if you start closing below your wick low, that is when you would cut and re-enter here again. Two different ways you can do it. You can either try to absorb the chop, this whole range, or you can go for more focused buy zone to zone, right? But either way, you're going to need a retest wick for that to be possible. So in this area, we are currently in a daily seller zone. Another thing to consider is if you do something like this now, where you reclaim 0.34706, that is also an area where you can try and take a long, okay? That area. So basically, for now, you have either this area or a flip. That's where I'd enter. This is in the middle of nowhere right now, right? You can enter here, but it's more of a gamble, right? For more structured actual trade setup, either flip 0.34706 or you get a tap of this zone. If you lose this zone, that's when you get to this. But, you know, don't think, oh, the run's over. We've had 573%, right? Look, if you get this high low, get in, because you don't know how high this could go. You saw what Uni did, right, when it first came out. You saw what Cake did. Cetus is a layer 2 on for both Aptos and Sui, which I think are going to be huge. This thing is going to get traction. It's nowhere near done. All you've done for now is raid your exchange high, right, that we got in 2023. Do not be surprised if we pull off something like this in the future. In fact, let's take a look at Cetus, right? So this is Bitcoin on log right now. The bottom we had 1.0707, but if we go to Cetus on log, let's see if we can find us some key areas. Where could this thing go parabolic is what we're asking ourselves, right? So trend-based fib extension firstly for students. Here is currently your macro trend. What have you done, right? So for those of you familiar with my system, you know what this means. We've hit the liquidity rate of the range extreme, right? One sec, let me select this again. So this is probably somewhere between the 1.05 and the 1.114, 1.13. I can tell you that right now, right? So this is 1 to 2, low, high, higher, low. There we go, right? Liquidity rate of the range extreme, right? And now you're retesting the liquidity rate of the 1 again. For most people, after the 786, the 1 is the next fib ratio, right? Not knowing there's other ratios available that you can actually trade with. So these act as liquidity rates to the range extreme. Anyone trying to short here, long here is getting absolutely chopped up. They don't know why, right? But there's a reason why, basically. So in terms of this, our 1.618 is our $1.54, right? From where we currently are, that is still a 386% pump. Right, sure, obviously, when, you know, if you took the setup when we called down here, that'd be a 2000%. But if you didn't, who cares, right? You forget about that, just move on with the opportunity that's in front of you right now, right? This right here. So one way, if you enter Cetus right now, you have a very, very clear, what you're saying is, if you lose 86.87, you cut, because you probably go to get the retest of 786.764 next. So below 0.28, closes below that, you don't want to hold this, right? But in this area, you know, there's no problem with you building a bag here. Especially with how, you know, alts are looking, there's no problem with you building a bag here, right? You got to get out of the bear market PTSD mode, right? Go with the momentum. You're getting a pullback to a key area. If you see buys being active here, if you see buys holding this area, you're not getting below the 86.87, you're wicking, but you're closing above, you take an entry here. Another way to look at this, for now, I'll just point out to this, you could for sure go higher, right? Another way to look at this is like this. So if I turn these off for once, and we take a look at, let's take a look at the macro fib retracement for now. So we go with 0 to 1 for students, right? So our fib retracement for the bear market was here, from this high to this low, right? Now, again, we're flipping the liquidity rate of the 1 into support, right? What we're looking for is, okay, above the 1, what do we get? Well, we get the 1 to 2, right? So, your golden pocket projection, $3.16. Right, so you have liquidity rate of the golden pocket around $1.69, but you're not going to be surprised if this 1.618 hits. If you go higher than that, then 2.618 could be another target, which will take you to the double digits, right? And I know this might look like, oh, but they're just lines on a screen. You've got to understand, these are lines on the screen that keep getting hit repeatedly and repeatedly and repeatedly. This seems impossible until it's not. Let me give you an example, right? I'm sure many of you are not familiar with how hard SPX 6900 ran, right? I had a very small bag of this at the lows because one of my very good friends is a great trader. Maybe you guys know him. He's called Alex. On Twitter, he's Redoubt Team 7. He was the one that put me on this one. If you take a look, right? Let me just delete this for now. If you go to log, if you go to linear, sorry, you would not have anticipated this move whatsoever, right? There's no feasible way in which you're seeing this as a target based on the price currently being at 0.01. But on log, if you take a look now, what did you have, right? You had a low, you had a high, you had a higher low. Where are you rejecting? The liquidity rate of the golden pocket. Right? Many people try to short the golden pocket. This is, again, people don't know these fib lows exist, but this serves as a liquidity rate in my system to the golden pocket. That is where you're currently going, and you're trying to flip the golden pocket into support. So switching between linear and log is very crucial for this stage of the market especially, okay? Because you're going to see perspectives that you just are not going to see on linear. You've got to expand your horizon now. We're in a bull market. We're in the literal parabolic phase right now, right? And we're just getting started. We're less than 2 weeks in. We're not going to be surprised if CETUS does something similar, right? So if you look to log, this was a very, very viable target because as soon as you put the high low in, you put the high low at the front run of the range extreme, right? And then you went and, as soon as you got above all-time highs at 0.34, well, you're saying that's your first target, then that's where you rejected from. You close above, this is your next zone. If you flip this into support, you're not going to be surprised if this thing pops back up to $4 to $9 at some point, okay? So, in terms of fibs, even though these targets might seem like, moon boy-ish, enter with those in mind. And if you see distribution like on the macro before, then just sell, right? But at least you're not going to sell too early if you know, and you're going to have a moon back for if you do ever hit these prices in the future, right? But let's go back now. But what are we looking at? We're looking at CETUS, I believe, and SUI, right? So SUI, there's nothing to be done here. This is literally at all-time highs. If you're lucky, you get a pullback to this demand zone. Currently, what are we bouncing off of? We're bouncing off of a buyer/seller zone. So if this is successful, you can take up play at this particular area. Your what's the one I'm thinking of? One sec. Invalidation is going to be if you lose this zone. Okay, this is an area where both on the daily, where both buyers and sellers are demonstrating the willingness to bid. Right, so this right here is a zone where you would enter. So, if you're not already in, like maybe wait for the daily close, or based on the fact that the 4 hours closed, right? The 4 hour had a successful retest. So if I do this and just go range current cycle, your 4 hour buy zone is literally currently being hit. You can start a position right now. I'm not joking, right? You could start a position right now, have a DCA for the lower half of this zone, right? And if you lose that, then you can just cut, right? Have a DCA for the lower half of the zone. You don't need to set any limits. Just watch it manually if you have time. If not, set some limits, of course, right? But for me, I don't like setting limits too much. I'm more of a market trader. And by that, I mean, I'm not market long in everything, but I'm spamming the order book and hitting limit long, right? Because I want confirmation before I really enter a trade. So if you're going to set limits here, you could do reduced DCA, reduced size DCA. And then, once it's confirmed successful, then you could enter the rest of your position size. But you could enter right now as we speak on some SUI, right? Just have a little bit of spot SUI. And look, now bear in mind, I'm not going to be entering here. I am already in from when I gave the original call, right? There is no risk for me. If you enter here, you're going to have to accept the fact that there's a very high chance you could get stopped out. Because now, SUI can do this at the end of the day, right? SUI can do this and still be completely fine on the macro, not look any worse than it currently is now, right? That's the problem with now trying to find entry models up over here. You just got to understand, the closer you are to the low, the easier your risk management is, right? Invalidation was super clear here, right? Super clear over here. Invalidation now becomes tougher and tougher as we go higher, because now, technically, only break in structure if you lose this gray zone, right? But obviously, I'm not going to tell you to have a stop loss below $1.50 when you're currently at $2.93, right? So you're going to have to just find local levels which have a higher probability of getting you stopped out, even though it's a valid trade setup, and just pull the trigger from there, right? If you didn't buy here, this is just the price you have to pay. It's what it is, right? But for now, you're at an area where you can at least have an attempt at managing a risk to try and get an entry on sweet, right? That's all I'm trying to say. And if you lose this, you just cut. If you make a lower high, you can hedge a short, right? If you get this, you can hedge a short here. But if not, then this is the area where you're looking for, some sort of bottoming to come in before we go higher. Because if you lose this, then I'll be looking at a retest of these all-time highs here, basically, right? Previous all-time high, $2.37. You have a demand zone there as well. Impulse, consolidation, impulse back up. This is a continuation demand zone, so maybe a fill of that before going higher. That's what I'd be looking for. So that's sweet. And last but not least, Ondo. Again, very, very key retest here. Look, Ondo daily, right? On the weekly as well. This is the area where buyers haven't been able to close any kind of bodies until the previous weekend now, right? Also a very important support resistance, as you can see. So flipping this level into support, you can bid, right? For Ondo, you can wait until the daily closes, or again, based on the 4 hours, you can enter some here. And then, DCA some if you get a rate of the lows, right? So if you go back to the daily, right? If you do something like this, but you close above, you can DCA some. Otherwise, if you close below on, let's say, the 4 hours even, if you get a 4 hour close below, then just cut. There's not much risk to you in terms of spot here, right? And it's not too late for this, because if this is lost, maybe you're lucky and you once again go and hit that demand zone right over here. I don't know why I did that with the diagonal. Let me do that again. Maybe you go and hit this demand zone down over here, right? If you lose this. But if you don't lose this, you're not getting this filled, right? So you can try and exercise some form of risk management where the areas you currently are, which is why if you try to take a trade here, I'm not going to say, oh, what the fuck are you doing? You can manage your risk, right? What you don't do is, when something's doing this, market long, enter spot here. No framework, no risk management whatsoever. At least you can manage your risk around key areas at the level we're currently at. So that is Ondo. So that's the main bags we talked about, right? So let's quickly look at Doge, another outperformer, right? Again, where did we call this? For those of you that haven't been in my stream before, didn't look at the videos, I have been calling this all the way from over here, right? When I released the harmonic setup video, been building backs from here, and the high lows, we literally been building. This has been a absolutely explosive move up. Right, hang on, where's the price gone? And I've got receipts. I'm not just chatting shit. You can literally go on YouTube right now and you can see live. You can see the recording I did. Right, I did this literally in a Unity live stream. Did all the setups. Went over all of them. 344% from when we built our bags down over here. And I'm not offloading this anytime soon. Those $2 this cycle, maybe. Who knows, right? Now, what would be lovely is, look, you have this supply triangle over time. If you got a retest of that at any point, that'd be great. Maybe we get the retest a bit later, because we do have a weekly currently. The weekly's not closed yet, so maybe on the 3-day perhaps. Yeah, on the 3-day, we do have a buyer/seller zone next to each other, right? So maybe we get the retest now a bit later, right? Or maybe we get something like this and then go up. If you did get a pullback towards this area and you see buyers are taking control and you're not getting back below, you take the risk, okay? Otherwise, I do not see any feasible form of risk management here for Doge. I cannot give you a trade unless you pull back to this zone. Because at least other alts are retesting, right? Even sweet, Doge is just still going parabolic. I cannot give you a trade here. Either you pull back here before you start to exercise any sort of risk management, or you just let this run for now. If you missed it, you missed it. You entering here is going to be devastating if you do get a reversal now, okay? Because again, Doge can now do this, right? And do this, and it would still be completely fine in terms of a macro perspective. Right, but you would be absolutely devastated if that happened. So don't take any unnecessary risk here. Look, if you weren't willing to buy here, just be a bit condescending to yourself. Be like, look, I don't deserve this here because I didn't buy this down here. That will teach you, if you're still around for the next cycle, to not fade the structures we get at the lows, right? To fight that fear, fight that FOMO. So right now, fight the FOMO. Over here, you should have been fighting the fear, right? You had a clear framework. Trust the framework, not your emotions. You don't have a framework here, so don't enter anything here. There's no entry on Doge here now. Retest of this zones is the next area where you're looking for to get some sort of re-entries. For now, there is nothing. So let me quickly go back to the chat now. Yeah, bro, that SPX ran so hard. Dash. Ooh, now that's a dino coin. I'll take a look at that. That is something to watch for. Let's take a look. Vanry, what's the stop loss? Let's go back to Vanry. Decides your stop loss depends on, are you going to go with a absorb the chop strategy, or are you going to go with a more focused strategy? If you're going with a more focused strategy, your stop loss is going to be below these wicks here. Okay, if you're going with the absorb the chop, which is what I'd recommend going with for spot, because just because of the area you're in, like if Vanry can do this and still be fine, right? If you want to not get stopped on a macro scale, I'd recommend laddering in instead of full porting here, right? Have an entry, have a DCA for this lower zone, right? And then as long as you keep closing above this, you're fine. Eventually you will get a pop up. If you get and go and start closing below this zone here again, then I would manually close there for Vanry. Two different entries. I would recommend spot. You do not need to leverage trade Vanry here. Look, you're still at an area where spot makes way more sense than leverage, right? You literally just hold your spot coins. And if you go spot, you can widen your risk tolerance, which in turn means you will not get stopped out on any flushes, right? And then you can actually absorb that back to the upside. If you go in tight, you could get chopped in, right? So I would recommend, look at the market structure. Ultimately speaking, you do not want to be losing this zone here. If you get below that, that's where you cut. Anything below here is where you manage your risk on an entry, ladder in. Entry here. If it gets over here, that's your DCA zone, right? You can limit here. If you limit, I would reduce position size limit. Otherwise, what I do is I always set alerts up at these areas, right? If you see buy stepping in, when you get that retest, you step in. If you see buyers are not stepping in, sellers are still in control, and there's no reaction from the buyers, just hold off from DCAing for now, because you might get a DCA at a better entry, right? Or better, or even another thing is, if you don't DCA because you don't see buy stepping in, and you go to your invalidation, you've only lost money on your initial position size. Your DCA haven't been hit, right? So let's say you went 30% CMP here, you'd only lose that 30%, right? You lose percentage based on that 30%, not your full 100%. So there's multiple ways you can manage risk, guys, okay? I know many of you think the only way you can DCA is entry, DCA1, DCA2 stop loss. And yes, that's an easy one to call, right? But in terms of actual risk management, being able to identify, okay, where is my key areas? And then based on those key areas, are buy/seller stepping in or not? That goes a long way in helping you decide, should I pull the trigger you had right now, or am I just blindly setting a limit open, right? Because if you don't see buy stepping in, there's no point DCAing, in my opinion, right? If you don't see buy stepping in, wait until you have an area where buyers are stepping in and DCA there. You're entering with confirmation. But yeah, so for Vanry, ultimately, look, you get below this 4-month buyer zone mid, that is where I would cut. You've lost all structure, right? But for now, you can see support. You could get a smiley face structure, initial support, rate of liquidity, reconfirmation of support. If you get something like this, that would be A+ price action on Vanry. But the reason I'm saying have CMP here is because you might not get that, right? And you might get this. So if you now go and start doing this, that is where you will now start to size up slowly. You can DCA down, you can also DCA up. But your line in the sand is 0.0767, around that area basically, right? The 4-month buy zone mid. Let me get rid of all of those. Okay, so there's got to be some coins in here, I'm sure. Let's take a look at some of these. Okay, Dash. Let's take a look at Dash. I've not looked at this in ages, so there we go. The last time we looked at this was all the way down here, and we never got the entry trigger for this trade, so I can delete that now. That was, holy shit, that was ages ago now. Let me quickly take a look at, yeah, I'm just gonna do everything again, one sec. It was looking really good over here. So I did in 2022. I did give this as a call before I was in Unity, right, on the server. So we got a nice move up here, but then it just absolutely crashed again afterwards. But yeah, we did catch some of this. But let me turn this off. We're gonna do this all again. So is there a chart older than this for Dash, by the way? One second. Dash USD. What about the crypto chart? The index. Oh yeah, there we go. That's what I'm talking about, right? Get rid of you. 2014, man, Jesus Christ, bro, absolutely crazy. Oh, and this should be a reminder. This is a nice show to you guys why you should. Okay, don't get too euphoric once we do start going up, right? Look, take profits. Market's not gonna go up forever. Especially like let's say towards the end of the second quarter around there next year. Like if you've not taken profits or anything, like take some heavy profits. Because every coin is going to be doing this basically, right? Your alts doesn't matter. Swee's running up now. It's gonna be absolutely bottomed out again at some point, right? Look what Sol did last cycle. You will get chances on these coins again next bear market if you miss the bottom or anything like this. So don't worry. But on Dash, where to begin? Is the question. You are in the only key level I can see right here on Dash is like you've not retested this. That's for sure. So you had one level down at 16,005, which you front ran. So the area you need to be holding right now on Dash, you've got two, right? The first one on the 12 months is right over here. This is your 2023 buyer zone, right? This is where in 2023, even though you had a massive sell candle, buyers took control back. And ultimately what you want to be doing, look at the chart, hopefully you see it, is you want to be flipping this area here into support right there. That's your 2022 buyer zone, right? So for the local levels for now on Dash, these are the support resistances you are working with right here. So if you're not in Dash, I wouldn't enter again right where we current. Actually, wait, hang on. No, if you, yeah, it doesn't really matter. I'd be more comfortable waiting for a flip at this level here. You can see that, right? Wait for a flip of 27.409 into support, or see if you get a deeper pullback towards this zone, right? If you get a deeper pullback, then you can say start to flip the mid into support. That's where I look to enter. But in spot is very, very easy right now, actually. What you want to say is you don't want to be getting below 23,099, basically, right? If you enter here, you could just say if you start getting candle body closes below 23.099, then you can just cut your position, because you'll be able to like just get your average in again at this zone, right? Because if you lose this zone, I think this time around you definitely go to 16. That is your 12-month previous cycle. Like, well, this is the 2014 cycle all-time high, $16. So here is your buy zone right there. You do not want to be holding this asset, definitely not below this gray box, right? And this is the important level you should be holding for now. If you do manage to hold this, and let's say you do get something like this, right, you would again have the cumulative smiley face structure at these lows, right? So that's Dash. Either flip 27.409 or wait for a deeper pullback. This is kind of in the middle of nowhere for me right now. But yeah, that's Dash. I don't know how well this is going to perform, because obviously if you look at this, this is clearly not our performer. With everything popping off so hard, Dash is just, basically flatlined. But yeah, it's what it is. It's a dino coin. Can we see AR? Sure, let's take a look at AR. Actually, I think I have this on focus. One sec. Have I? Yes, I do. This was under the harmonics completed section, right? AR, this is looking beautiful. You have a macro bat right over here, right? The 2.618 of the macro bat, the 0.86 of the macro bats within this zone. Looks sort of like AVAX, right? You had an M shape, you had your accumulation, and then you busted up, basically took out the B point of the M shape, and now you're putting a higher low in, where you are revalidating, in this case, that zone between the 2.618 and 2.86 of the original bat, right? So yeah, AR, another one that looks good. This was again covered in my harmonic setup video. So we've hit this over here, right, on the weekly. We've hit this zone, which is the zone we were talking about.
Bro, sorry to interrupt. Your voice is breaking up.
Oh, is it? One sec.
Yeah.
1 second. What the hell? Is it still really, really bad, or?
It's still bad.
Okay, yeah, 1 sec. Yeah, I think there's something wrong with my Wi-Fi, like usual. Let me wait for this to
Oh, now it's good.
It's
Now
good
it's
now,
good.
yeah? Okay, wait, how long
Yeah.
has this been going on for? Been like Wally for what?
No, it was just recent, and that's
Recently,
why.
yeah, okay, yeah, sound. Yeah, sup, Grisati, bro, how you doing, man? Nathan, what you hiding, bro? Right, let's take a look. Yeah, concludes hiding, brother. I'll be putting this on my YouTube. Yeah, don't worry about it. I've got the recording on now. Um, 31.4. Yeah, going for your like 30 to 31 range. That's crazy. Okay, let me finish up with AR, then we'll look at OP. Okay, AR. We hit this zone again. Look, this is beautiful because what you have your macro M shape from history that is being validated. Your type 2 is a godly 618, 1.618, 786, right? You're simply looking for, actually it's very easy. If you wanted to enter AR right now, you could do so. You could have a CMP entry of, let's say, 25, 30%, whatever it is you're happy with. You don't have to go too heavy too fast. When you flip this macro godly 786, have I turned that off? Yeah. If you flip this 786 into support ever, right, this one, you can size up some. Because at the end of the day, you're still on lower highs and lower lows, right? You don't want to be fully positioned yet. So if you remember the 20, 40, 40 I always describe, you can do this with whatever ratio you want. Have a CMP entry, have one for if you go lower, have one for the trend shift. The trend hasn't shifted on AR yet. Many alts haven't shifted the trend yet. When is the trend going to shift on AR? When we go and on the weekly, on the monthly, on the 2 weeks, it's very evident. This high right here is what we need to go and take out. On the daily, it might be slightly different. So on the daily, it's actually lower low, lower high. On the daily, you do have one level, but I'd be more comfortable if you went and took out this proper level up here, right? This one. Right now, you're basically just at a supply zone. That's all this is. That's a liquidity pocket, right? So you can do CMP entry, have an allocation for should you go deeper, right? So for example, should you go into this zone here, and you see buy stepping in, some of that 40% or whatever ratio again you've gone with, right? You're going to start allocating that there. Invalidation is pretty clear, right? Your final DCA allocation will be should you go back towards this 886, right? If you do that, as long as you hold this level, you are fine, right? But if you wanted a really tight invalidation, if you start closing below the mid of this, you can just cut, and should you get towards the 886, you can just re-enter again, right? Multiple ways you can do this, but at the end of the day, as long as you're above $10.78 on AR, right? You're gonna go higher, right? So your final allocation, you're going to put in when you get something like this, when you get some sort of trend shift and an attempted high low, that's going to be to size up with, right? You're going to be fully positioned on the right side of the market. Technically, right now, you're still making lower highs and lower lows. You're in a downtrend, and everyone tells you don't catch a falling knife, right? So you DCing fully here is you trying to catch a falling knife. So have an allocation for when the trend shifts. But yeah, AR looks good, bro. So you have your key levels right there. First thing I'd be looking for is if you enter CMP, you could do something like this as well, right? Some sort of high low here. That's where you size up for your trend shift. These you have a demand zone down over here on the daily, right? DCA somewhere down in this area. If you lose that, you can just cut, right? Because then you're saying, maybe you go to 1078 again, you can re-enter. But CMP entry, you can get away with doing a CMP entry, yeah. Yeah, at the end of the day, you are once again above support, right? So that is AR. Let me get rid of these, and let me get rid of these. There we go. Very beautiful M shapes, right? This is very confluential down over here. Because you do have a weekly order block here, right? So maybe you go and fill the mid, something like this. That'd be a great area as well, like we've just been describing. So that is AR. Let's take a look. Do not know what $ cow is, Chris. I'm really sorry. I don't even know if that's on TradingView. OP. Let's take a look at OP. Another one that was in our harmonics completed list, which is right over here. You have two different things here. You have a bat and you have a shark. 886s on both of them, right? The PRZ is in the red box. This is the PRZ. In this case for me is a weekly buyer zone, right? You have flipped your quarterly buyer zones into support, and now you are back here. Look, OP is another one that hasn't shifted trend. Your last lower high that led to a lower low hasn't been taken out yet, right? So if you wanted to enter on this, how would you do so is the question, right? Let's see if you can get any higher time frame levels first. So let me turn harmonics off. Let me turn the price range off. We can just do that in the future. You off, off. Create a group of drawings here. group 1. So why do I literally only have this in group 1? Put this on the harmonics. There we go. Yeah, that's better. And this, let's turn off for now. So on the 12 months we have, let's take a look where we are. We have a 12-month seller zone right over here. So on the macro, these are your key levels. You can see why we rejected what we did, right? This was your 2022 12-month seller zone mid. So let me just go and mark these out. So we have, this is the 2022 12-month seller zone low. This is your 12-month seller zone mid. And then this is your 2022 all-time high right over here. Yeah, 2022 all-time high, right? What do we have after this? The macro read for the 2023 candle goes like this. So on 2023, you have from this wick low to here is the overall directionality of the candle. So we have over here, I can probably go ahead and turn this particular level off, to be honest. So what I'm going to do is go to settings, turn off the 0, no, turn off the 1, because I'm just going to treat this as the 1. But what we can do here now is this is your 2023 12-month macro read, and the overall short directionality is a buy zone mid, and then on the same vein this is your high. And let's color this dark brown sort of color. So we already have our key levels that we need to watch for on the 12 months, right, on the screen. We do have a seller zone here, which is what we rated, right? That's going to be important in the future, but I'm not going to mark that out yet. So if you go just to the weekly now, we can see we bounced off the 2022 low, right? We've regarded a support back in 2023, and now we're putting higher lows in as compared to that. Right, there we go. We're holding the demand. Now on the 6 months, let's go lower. Right, so we're now going to have local levels to speak of. On the 6 months we have, if you go current cycle, here is your macro read. So this is your 2024 6 months, and this was from January, February, March, April, May, June. Macro read seller zone low. We have mid, we have high. So now in terms of the 6 months, we also have some key levels, right? So we can see what we're doing currently. We're below. So this is what I've done with the white lines, right? This is, I call this the macro read. This is the overall area in the last 6 months where sellers were in control. Sellers were in control for this one. And now if we take a look, what we see going for this is this current candle is below that area, right? We've tried to get into it for now, but for now, we're not succeeding. Meaning, an area where sellers were in control before is still an area where sellers are in control for now, right? So we obviously know that $1.80.3 is something we want to regard as support as soon as possible on say, especially considering now that your buyer zone is in this area, right? So I'm going to do this, go on settings, text, I'm going to call this the 6 month buyer zone. This is on the 6 months the area where buyers were in control now. So if I go onto the weekly, right, let's just do it from here to here. You can see why we are currently rejecting now of this area. Very, very key level, right? The macro read seller zone low was here, but then the actual area where buyers took control on the 6 months is representing an area. We're within that area for now, right? So as long as we are within this zone, everything is fine. So OP, very, very simple trade if you wanted to take one right now, right? I'd put stop loss below that wick there, right? These sort of ranges. Even if you were to take a absolutely conservative TP at the next key area, $2.30 is still a risk to reward of 3 trade based on this, right? And the beautiful thing with this is, should you get a raid of these lower levels, right? And if we haven't even gone and marked out the ranges there yet, let's do some more work here for now. So we've marked out the 6 month buyer zone. We marked this out. What else did we have in this area? Well, in history, we can see we had a 6-month seller zone here at some point, right? If I mark that out, you can see we're using this area as support now, right? This used to be a seller zone in the 6 months. So you can see, why have we been using this as support, right? Because back in 2022, right, in the 6 months, this is the area where sellers had taken control, right? So this is something I'm actually going to mark out. It's a very key area. Let's get rid of the brush, right? Let me go and mark this. So this is just showing you guys live how to get these key levels on your screen. This is the 2022. Let me just make sure that's right. Yeah, 2022. This is the second half of 2022, I believe. Yeah. So January, February, March, April, May, June, July, August, September, October, November, December. So J2D. This is just the seller zone high. This is your seller zone mid. And then I'm just going to turn that off because this lines up with the 12-month seller zone low anyway. So we'll go to the settings and I'm just going to turn the 0 off for this one. I'm going to color this a different color so you guys aren't confused by what each line is. So for example, let's make this one, you know, something like this, right? Yeah, there we go. So with this now, so these two are our create a group of drawings. This is 12-month buyer seller zones. Wait. And now this is other time frames buyer seller zone, right? But even by doing just a few of these, right? So of course we could do this for this as well. Like you can see we have over here, for example, the overall area where buyers were in control in 2023 is here. Why did we bottom out here on OP? That's the 0.5, right? So key levels, they're honestly not that hard to find. You just need to have a system that you think works, right? So here was your overall macro read for this candle, and then the overall seller zone. If I just go and change the color of this now so there's no confusion, say make this purple, the overall seller zone for this candle was all the way up over here, from this high down to this low, right? So you can see that 0.5 lines up pretty much perfectly with this, right? $2.30, $2.37, right? So extra confluence as to why this is resistance. So I'm going to go ahead and mark this out as well. So now this is 2023, right? So this is 2023. So over here we have 2023 6-month, and this is the start of 2023. Yep. Wait, no, it's not. Yeah, it is January to June. This is the macro read, and the macro read is a buy zone mid. Macro read buy zone high. Go and turn off the 0 in this one. Yep, there we go. And then you have the macro read buy zone low down here, obviously, right? So add the text, buy zone low. Put this in other time frame buy seller zones, and then right over here we have, this is now the 2023 seller zone, right? So not this, but rather this is just your seller zone mid. And then you have your seller zone high right here. So you just do this over time. You're going to get your key levels on the screen based not just on arbitrary things like that looks like support resistance, but based on actual, like where were buyers active, where were sellers active, what was the overall directionality, so on and so forth. And we could do this with this candle, we can do it with this candle, so on and so forth. We can keep doing it with these different candles, right? So on the 6 months, just to show you what I mean, like you could get this down. That's another macro read. You have more key levels on your screen, right? But for now, I'm just going to leave it with this because we're interested in what's happening down in this area. If you go to the daily, it should become very, very evident what you don't want to lose right now, right? Because you have initial supports, radon liquidity, reconfirmation of support. You have the smiley face. You have that cumulative structure, right? You do not want to get below $1.334 on OP right now. So that would be my stop loss basically, right? If you were to get below this zone, and on the weekly you have a buy zone right here. If you lose this gray box, you cut OP. If you lose this gray box, you cut it. Very, very simple, right? If you get down towards this area, that's a very nice place to bid. So for now, if you were to enter CMP on OP, right? Let me just do this. Delete that. And we know we have another rectangle right over here. That's a key zone. That's your 6-month buy zone right there. And then this is your weekly. No, sorry, this is your daily buy zone. What about the weekly? Do we have one? Yeah, the weekly has one. So the weekly has one. What does the weekly look like? Yeah, the weekly looks like this. There's your weekly buy zone. There we go. So this is your weekly buy zone, an area in the weekly where sellers could not take control, right? Even though the overall candle was one where sellers were in control, buyers took control back from the sellers. And in this particular case, the text should be on the right to make it clearer, in my opinion. There we go. So now, you know, very, very easy to see what you're looking for. Well, currently speaking, right? The area you're currently in, if you wanted to take a risk, you definitely can. Because you're now trying to flip the low of that 6-month buy zone, an area where buyers were active in history, into support. And if you enter here, basically I'd be saying if you start closing candles, right? Closing candles below 1.575, you cut. Because you're saying you either get a pullback into this zone again, or you're going to raid liquidity and eventually reclaim. You can just enter on the reclaim. Right? But for OP, if you enter now, you get candle body closes below 1.575, right? That is where I would cut. And ideally what you see right here, you see a demand zone. Basically, you lose that, you cut. You're probably going to go down over here. And you would enter down here again. Right? But yeah, OP is at a very, very good area. And again, if we look at the M shapes, we look at everything this has going for it. And we realize, you know, trend hasn't shifted yet. Once the trend shifts, you want to be fully allocated by then. Your targets are here, $2 something, right? And if you ever go above that, OP is another one of those coins I'm expecting to make new highs. So like right over here, maybe we go and tap some of this in the future. Fill the wick, go back to $8, right? Who knows? You have, if the time says it's possible, maybe it is, right? April, May, June, who knows? But for now, you know, let's stay a bit more conservative for now. For now, you'll be playing the harmonic targets, right? Your B, your C, and your A. If you flip A, that's when you talk about this, because you have nothing else going for you. Literally nothing. Even on the 12 months, you have nothing going for you. On the 6 months, you have nothing going for you. Above $4.61 to $4.86, $4.63 to $4.86, you are going to go to fill the wick at $8.345. Right? There's no data here indicating why you should make another lower high in some random area here. Right? And if we see the structure come in, sure, we can talk about it then. But for now, in terms of historical price action, 8.345 is where you go to above 4.861. Basically, you're double in price straight away. So, you know, yeah, another one where, you know, just like with the entry model I just described, you can take multiple attempts at this, right? You can either go in with the tight stops based around these local levels. You can either try and go in to absorb this range, and your invalidation is if you lose, right, this, if you start closing below this area here, right, the area we were talking about before, $1.334, right? You don't want to be closing below that, in my opinion, right? You'll be losing all sort of local market structure. But for now, if you decide to enter, I'd go with the tighter one, in my opinion. If you are someone that is like, you know, just scared to hold in the red, right? Just go with the tighter one and just buy lower again, or buy on the reclaim. I know this was a bit long-winded, but I just wanted to show you guys how to actually get this key level, so there's no confusion. But that right there, that was OP. Let's take a look. Tia and Whiff, yeah, let's take a look for you, right, bro? Tia, right over here. Just type it in. Tia, as long as you are above this grey box, everything is fine. But if you do get a market-wide flush on alts once more, I would love to get this lower grey box here. If you take a look, if I go on the weekly, no, just, you know, but no, just go on the daily. You can see why, right? You have a shark, 1.13 at the top, 0.886 right over here. Pretty much it's a slight extension, so it's not a 2.24, but who cares, right? So you got an 886 on the shark. So this is, maybe a wick down and something like this. But as long as you are staying above this gray box, right, where you have your smiley, you are going to go high on tier. So if you do decide to enter, I'd enter somewhere in this grey box, and then validation would be, look, if you lose the grey box, you start closing below, just cut it. So $4.256, that'd be the invalidation. Another way to look at this is that the grey box is going to be taking us down back towards our buy zones right over here. Right, we do not want to be losing these zones. You have 4-month buy zone, 3-month, they're all in this area down here. We're still just ranging on tier. Trend hasn't been shifted yet. Well, technically you could argue trend has been shifted. Your last, hang on, weekly, has it? No. Well, you've taken the internal, the external is still over here, right? But high, low. So yeah, something like this on tier. As long as you're above the grey box, basically, right? You can see even in terms of buy seller zones and just market structure, this grey box is crucial. As long as you don't lose this grey box, you can try to take some bids. If you lose this grey box, then yeah, below 425.6, closes below that, I'd cut until a reclaim or until we get lower levels. So that's tier. And with another one we entered based on harmonics. Where is with XABCD? Hang on, let's do the original one first. We had well, the dragon completely busted through. Once we could have. What did we need for a cipher? I forgot. What was the C for a cipher? It's 1.27, right? If it is the 1.27, then this dragon. That is beautiful. It's nearly a cipher here. A bit higher would have been nice on width, but you pretty much like front run a cipher here. That dragon got turned into a cipher. For those of you that know, a dragon is an informal harmonic pattern, right? And if your C matches basically the requirements for a cipher, which I believe in this case is 1.27. Correct me if I'm wrong, but this has the potential to turn into a cipher. So this pretty much front run it. For a cipher, you're looking for a 786. So yeah, I think yeah, it's a cipher in the making. But for now, I'll leave it as a dragon until that cipher gets hit. Actually, no, I won't. I can use this for future references for students. So I'm gonna lock this, and then I'm gonna take this to the 786 right over here. Cipher pattern. Right, there we go. Put this right next to this one. Right, the proper one we're looking at is this. We had a, not this, Jesus Christ, where's it gone? Group 1? Yeah, there we go. Right, we had a Gartley 606 786, right? So this is Gartley. We're talking about this for ages. We said you filled your Gartley, you filled your key areas, right? What were you doing down here? You had this was your accumulation range. You had a liquidity pocket. Where's it gone? One sec. Key levels. Buy seller zones, right? You filled the 4-month buy seller zone mid. You created a 4-month buy zone. You used the mid as support on the weekly as well. You filled the 5-day fair value gap mid right over here. Rated it, closed above, right? Beautiful. So this is the one where, again, where we're accumulating our whiff bags right over here. This was given in the harmonic setup video. And so we hit T1. And more than that, we came down. And this, I said, if you look for a higher low on whiff, it's going to be here, right? We got the higher low, went up, came back down, rated the lows, but still maintained the B point of the harmonic. So now you're going towards T2, your terminal 2. On whiff, it's very, very simple right now, okay? Where you currently are is clearly on the weekly and on the daily is resistance, right? Especially so on the daily. If we go to the weekly, actually, we can extend this. On the weekly, we have this currently as now our area of resistance, right? Yep, that's our area of resistance on the weekly. But what we're saying is, as long as you are above this zone, right? Put this here. As long as you do not lose this zone, it's completely fine for you to try and get a position on whiff. The trend is now clearly to the upside. The last lower high that led to the lower low has been raided. The high low has been put in, and now you're looking to work up, right? So if you wanted to take a risk on whiff, it's very simple. If you decided to enter here, if you close below this grey box, I'd just cut there, right? Because maybe you get a shot at 249 again if that happens. So I'd be basing everything around this zone for now. Look, if you lose this, cut. If you enter here, you don't want to see closes below this, right? 4-hour closes, whatever you want to put down. Close below this box, just get rid of it. And then should you reclaim in the next 4-hour candle, who cares? Just rebuy I'm not telling you to go leverage 50, 500x. I'm going you to buy spot, right? And then we're targeting hella upside. But yeah, that's with bro. For you, Rai brother, with and Tia. So I look at Pith. Let's take a look at Pith first, since that was already requested. I do remember thinking Pith looks good. Let's go with OKEX. Why do I have two? Why do I have two? One sec. Pith, hang on. There we go. That was just the idea I was playing around with, but that's not working. This is the retest we're looking for. Okay. For Pith, again, what do we have? 618, 786, 1.786. Right, it's a Gartley, right? This is a Gartley. Based off the Gartley, we have accumulation, chop, chop, chop. Reclaim of the Gartley as supports. Your last lower high that led to the lower low. The last lower high that led to the lower low has been taken out. Again, for Pith now, very simple. If you want a spot entry, you want to take a shot. If you enter here, very simple. If you close below this grey box, you don't want to be holding. Why? Wait, hang on. Let me extend that zone. There. If you close below this grey box, you don't want to be holding. Right, so you can do CMP entry here. If you see a raid of this box here, right, there's some sort of raid here, you can DCA, and then, you know, if you ever do and reclaim the mid of this box, look like you're going to go higher, do your final allocation there, right? Spread your buys out slightly. Don't go all in at once. Give yourself room to breathe. But below this grey box, you don't want to be holding Pith. This one's for you, bro. I think who was asking for Pith? It was Majki. This one's for you, man. That's Pith right there. Invalidation is below. Closes below 0.3734. You don't want to be holding. You're probably going to go back down towards 33 cents if that happens. So you get better entries. So this, where you currently come in, this would be a nice area to add, basically, right? Between this dotted white line and the bottom of this zone, that would be a super nice area to add. Basically looking for a flip of this zone and then push higher now. So that's Pith. Okay, look to Jupe. Okay, let's look at Jupe, and then after that, I think I might be done. Yeah, after Jupe, I'm done. I've got another thing to do after this. So Jupe USDT. Yeah, so someone else was asking for this, and the entry model I said to them was, if you want to get into Jupe, you want to flip this and go higher. Because if you don't flip, actually, wait, I think it was you, wasn't it, Ryu? I was asking for Jupe yesterday or day before. Jupe USDT. Hang on, there. Yeah, so this is why, you know, we wait for the flip, basically. We didn't get the flip of the key resistances. We hit 3-month and 4-month seller zones, basically, right? Seller zone mids and seller zone highs, areas where sellers were in control before, so now we're seeing a nice little rejection. We didn't get the flip, now we look for that lower entry. Lucky us, right? Lucky us. So, on the weekly, what we have now is, we have this zone right over here. This is where I'll be looking for an entry on Jupe. So, we have, get back in here, this lower box here, bro, for Jupe. If you get this, that's where I'd look to manage my entries. Stop loss would be, basically, if you close below this candle, because there's a buyer and a seller zone right next to each other here. If you close below 0.984 cents, that's where I'd cut, because then you're basically saying you're probably going to get deeper wicks into here. But I'd be looking for successful retest of this zone. I mean, even when you currently are, you could literally go open up a CMP long 20-30% or spot, right? Prefer spot. And then DCA, have allocation for DCA at these lower prices, because you have shifted trend, I believe. If I go to the weekly, your last lower high that led to the lower low has been raided. You're just looking for a higher low to come in. This seems like a logical place for a higher low, right? So this is where I manage my entries, and if you start closing below this, especially the red line, that's where I look to cut. Your choice, whether you do it based on the box itself, or you give yourself some breathing room and use the wick as a cutoff at 0.984. But deeper areas where you would now manage your risks for an entry. Right now, the trend is flipped. You're not looking for, let's go and make new lows. You're not thinking that. Get out of the bear market mindset, and if you get opportunity to buy at pullbacks, you take the bids. So this small box here especially, that's where you really want to see buy stepping in. You don't want to close below this. So again, you can do 20%, 30%, whatever you want CMP, have allocation for here, and have allocation for when the actual retest is proven to be successful. You could save allocation for when you flip this into support, right? Because you can see above this, you go straight towards your 3-month seller zone mid, right? Or you can, allocate yourself fully here. It's completely up to you how you manage your risk. But the key levels, you're going to manage them around, are on the screen, right here. This gray box, below this, closes below this, not good, right? Just cut it. But yeah, that's dupe right there. $30, 31.4. Jesus. Pi. Yeah. Okay, so that's dupe. 77,289, yeah. Yeah, dragons aren't official harmonic patterns, by the way, guys. Dead butterflies collection, hey. Yeah, I feel like if someone should do a paper on the correlation between harmonic traders and those people who like to pin butterflies to boards. I bet that'd be a strong correlation. That's the Y equals MX plus C relationship right there. Yeah, miss vibes. That'd be invalidation for both spot and leverage. The key levels don't change, right? Yeah, I'll be uploading this to YouTube. I've got a one-on-one student in 6 minutes, so I'll finish with that, and then after that I'll upload it because I'll be done for the day after that today. Yeah, same. I promise I didn't, sit there frying ants with one of those lenses when I was a kid. Um, yeah. Okay, so I'll finish up again, guys, with BTC, right? If I missed any of your requests, I'm really sorry. Ping me in crypto chat, and then when I get time, I'll get to you. Okay? If you put any requests in here that didn't get hit, just ping me in crypto chat, and I'll get back to you when I have time. I want to finish off with BTC, right? Again, obviously we see a big red candle forming, 85k. What I want to see is in terms of harmonics now again, right? Dead butterflies collection and that. Let's go. In terms of harmonics, right? We have hits now. We've gone above the godly. We talked about this. We flipped the butterfly, vertical accumulation. For those of you, vertical accumulation is literally designed for spot traders to just slowly advance price as leverage gets chopped, right? You see this all the time. Same thing happened when you broke out down here. You broke out of this. Everyone was still saying, oh, let's go back to 10k. Everyone was getting chopped up in leverage when in reality price was just making higher highs and higher lows. I call this vertical accumulation, right? So we had the guard, we've had the butterfly, now we've gone and we've hit the 1.618. This is a crab, 618, right? Basically the 786, the 3.082, the 1.618, right? We have hit a crab, which is why we are getting this reaction right over here. Above this crab, we have a AB equals CD, 382 right over here, and the 382's reciprocal ratios are the 2.24 and the 2.618. Extra confluence for the targets we were looking at earlier. If I turn the targets on, right there. Right, so between 101 to 109, we do have an AB equals CD. We have harmonic targets there. So what we need to do, we need to go and flip this 1.618. Right now we actually have a key level. If I put this level down, right over here, I do this, go on settings and coordinates. I'm looking for 88916. I'm going on this one, settings, pasting that in. This is the crab. Jesus Christ, the crab 1.618, right? So 88916 is a level. I'm on the index chart. It might be slightly different on exchanges. So go on whatever exchange you trade and put it down yourself. But that 1.618 now, we're looking for a flip of that to go long. Until that gets flipped, you are not going to be blindly longing now. Okay, unless you get pulled back into some sort of key areas we talked about at the start of the stream. We have hit that, and above this, I'll be looking at 101.378 to 109.792. We have the 2.618, the reciprocal ratios, 2.24 to the 2.618 of the AB equals CD between that area. So that's what I want to leave you guys with. So I'm going to end this stream here, guys. Thank you very much for your time today. Right, thanks for showing up. I always appreciate the support. If anyone's interested in the way I trade, reach out to me. If not, just join me in my weekly streams. I won't be streaming next week because I will be on vacation. I need to clear my mind and relax before this pop up on the 23rd. But after that, the week after that, I'll be back to normal. So I won't be streaming next week, but the week after that, I'll be back to normal. I think I'll be in Slovenia and Austria, just go around visiting some lakes and whatnot, paddleboard. But yeah, I'll stop this recording here, guys, and